Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, December the 30th. Before we start, please know that all of us at ToniTurner.com wish you and your loved ones a healthy, happy, and very prosperous new year. And now on to the market. Wall Street is fairly flat today. That can be expected on the last trading day of 2016. We've had some losses across most sectors, but the market is still on track to record hefty gains for the year. The S&P 500 is on track to rise nearly 10% this year, the Nasdaq to rise 8.3%, and the Dow 13.7%. And now let's look at some charts that will show us the year's end and give us some insight into the week to come. First of all, we're going to look at a weekly chart here, which I think is fitting at the end of the year, of the S&P 500 Spider, symbol SPY. This is the ETF that closely tracks our S&P 500 index. As you can see here on this weekly chart, when I captured this chart, the SPY was trading at $223.83, or about $23.38 on the S&P 500 itself. Now, this will not be the exact closing number for the year because the market hasn't closed yet today, but it will be very close. So you can see, and this is a 5-year chart, and I've plotted a 30-week moving average on it. The 30-week moving average is pretty good for giving support to healthy trends, and you can see that it's worked very well from the middle, well, actually the beginning of 2012. 2012, the SPY dipped below this line, then moved back up and pretty well used it for support as a trend line all the way through 2013. We had a slight dip in 2014, but it moved right back up. You can see how the SPY walks right up this 30-week moving average when it's feeling good and energetic. In 2015, we had a couple of dips here. As you see that after this run up, and a strong run up, actually that started in 29, we all remember that, kind of stumbled in 2011 and then continued higher, stumbled in 2015, and then, of course, into 2016 when we had worries about China and the talk went on and on about what rising interest rates would do for or against our markets. So now, as we can see, in 2016, after a slow and negative start in January and February of 2016, our market has risen very resilient, very dramatically, certainly over the 2015 highs of around 210, moving up again and in an uptrend through the end of this year and making new all-time highs consistently once it got up over this 210 marker, 2100 on the S&P 500 itself. So we've had a really good year. We've had a pretty nice Santa rally this December. Now, if we look at our price where it is right now, can it go higher? Yes, it can. But as you can see by this chart, price on the S&P, and of course it has 500 components, can move up for a few months at a time, but then it needs to come back to the 30-week moving average, rather like your feet would come down to a stair step if you were walking up a stairway. Your legs move up over the step, but then they come back down, even though you're moving higher at all times. When the S&P 500 is in an uptrend, that's exactly what it likes to do, and you can kind of see this motion when you look at these earlier years. But this motion continues because although we had a hesitation here at the end of 2015 and 16. Now, though, the question is, how long can this stairway continue? How much longer can the S&P 500 move up in this uptrend? The bull market is getting a little old, but there's nothing that says it can't keep on going. I would suspect here in coming weeks, just from looking at the fact that the SPY, even on this weekly chart, is trading near, not at, but near its overbought level on the RSI. The MACD line, the black line, is trading above its signal line. That's positive. I would suspect somewhere in January, maybe going into the first 2 or 3 weeks, that the SPY may need to come back in. After all, markets can't move higher unless they move lower first. That this foot may have to come down on this stairway again before it starts higher again. Nothing too dramatic, but certainly profit taking is always something that happens. So we have a positive end to the year. We should be very happy about that. Remember that November, December, January are the most profitable, typically the most profitable months of the year. So we'll see what happens in January. I do expect 2017 will be full of lots of surprises. Now let's move on to our PowerShares QQQ. This is the Nasdaq 100 ETF. And as I look at the large momentum stocks in this ETF today, in the Nasdaq 100, I'm looking at Amazon, Alphabet, Microsoft, Intel, excuse me, Netflix, Facebook. All of them except Apple are heading lower here, at least in the short term. They look like they're giving up some of their giddy up here. And I'm wondering if the QQQs also need to come in for a rest. We can see that like the SPY, they traveled in a pretty neat line from 2013, 2014, 2015, had the same dip more or less that the S&P 500 did in the middle of 2015, certainly sold off in the first part of 2016 like the broader index did. Then climbed up dramatically, very, very resilient here, staying above their 30-week moving average. And today when I capture this chart, the Qs are trading, excuse me, at $118.79. Now, the Qs had an all-time closing high on December 27th, just a few days ago, of $121.52. And if we were to back this chart up to and had a much bigger chart, say a monthly chart that took us back to March of 2000, we could see that that the Qs, that $120.52, beat the all-time high of $100.50 back in March of 2000. So that's kind of interesting. So we got back up to this point. Now, how strong can these tech stocks, these big momentum stocks, stay? And that, of course, depends on what happens in the new year. And please know that no matter what anyone says, no one knows where the market is going to go next. Just something we want to remember throughout the year. If we look at the RSI here, the 14-week RSI, we can see here that maybe there's a little reason here to be a little more cautious. Certainly not a reason to sell everything, but to be more cautious. We can see that it's making a bearish divergence, the RSI from price. While price continues to move higher, making slightly higher highs, the RSI is saying, hold it, I'm not so impressed. So that's kind of an internal measurement the RSI takes. So it's something we may want to just put at our elbows and keep an eye on. Also the MACD. The MACD line here has actually fallen below its signal line. It's back up now with it, still over the zero line, that's positive. But the MACD here also making a bearish divergence, showing weakness in the face of strength on the Qs. Usually price will follow the indicator. And here we have two indicators saying price is a little weaker than it looks. So just keep that in mind. Still, it is a bullish chart, and we'll keep an eye on this 30-week moving average as we move into 2017. Support here would be at about $115 for the Qs, and then on down to 110. Now let's go into our final chart for the day. We're going to go into a daily chart here and look at a pretty beaten up sector that may be able to move into, may be able to break its downtrend and start moving up a little bit and the operative word here is may, because going into this new year, we're not totally sure of anything. This is a daily chart of the select sector SPDR, that's correct, utilities ETF, symbol XLU. We haven't looked at the XLU in a long time. Again, it's been pretty beaten up. The XLU primarily provides companies that produce, generate, transmit, or distribute electricity or natural gas. The component companies include Exelon Corporation, Southern Company, Dominion Resources, like that. Since interest rates have moved higher, or the Fed has raised interest rates, utilities usually get slammed when that happens, and utilities, in fact, did get slammed this year. The XLU moved from $53 down to around $45. Now, however, it looks like it's trying to come back up. When I captured this chart, it was trading at $48.75. We can see here, if we look, almost an inverse head and shoulders pattern, which can be bullish if it plays out. And by playing out here, we mean that price has to rise above this point here at about $49.35. That would be the resistance level here. I need it to rise above. So the XLU is trading above its 50-day and 200-day moving average on this chart. The 50-day is green. The red is the 20-day, I should have said, moving average. What we want it to do is move up and over the black line, the 200-day moving average, at about $49.30. If the XLU can move up and over $49.30, then maybe it starts to get more positive on the year. Of course, these utility stocks typically pay very nice dividends. So if uncertainty comes into the market, the XLU could potentially move higher. As usual, I am not interested in the XLU if it moves below the 50-day moving average, and that would be right now at about $47.75. So that would be my stop if I entered the XLU, would be a close under the 50-day moving average. This is just something you may want to keep an eye on as we move into the new year. Now we'll go on to next week's economic reports, but first, please join us on Tuesday, December 27th, for our next session of Tuesday, January 3rd is what I meant to say, for our next session of Toni's Market Club. We usually meet on Mondays, but because of the New Year's holiday, the market is closed on Monday. We will meet on Tuesday of this coming week. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. And please know that many of our members have been with Toni's Market Club since its inception back in 2009. So we've got a great group, a fun group. Our goal is to have fun and make money. So please, again, do join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information, please, or to join, please go to tonysmarketclub.com. And now for the coming week's economic reports. On Monday, the market is closed for the New Year holiday. Tuesday, we have the ISM index. Wednesday, we have auto and truck sales. Thursday, we have the ADP employment numbers, ISM services, our usual job claims, natural gas inventories, and crude inventories that are one day late this week. On Friday, we'll have the biggest report. That will be the monthly jobs numbers with the unemployment report. Again, join us for Toni's Market Club this coming Tuesday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, again, we wish you a happy, healthy, and prosperous 2017. I'm Toni Turner, and this is The Market Now.